Hello, I'm Brent Wilsey, and with me is Chase Wilsey. We're from Wilsey Asset Management. And today, 7 years ago, is when the bull market started. Now, I remember that time. I remember the Dow around, 6,000, S&P was down and so forth. But what I want to talk about today is that is in the past. But what happens if you didn't buy at the bottom? Was it terrible? Well, not really, because we don't time the market. We looked at the market as far as saying, let's find some good companies. We started buying November, December is when we started buying before March. And we started buying, probably around 800, maybe 900, the S&P. Well, now it's pushing 2,000. So even if you did not buy at 676, which was the all-time low at that point in time, you still made some good buys. And I don't think anybody actually timed that perfectly.
Yeah, I don't think anyone was going to say, look, today, or 7 years ago today, was going to be the absolute bottom. I'm going to buy today. I just don't think that happened.
I'd probably claim it, but it's not really true.
Yeah, but I mean, what we look at, as you said, is, there was a lot of great values on businesses on the way down when the stock market was falling. There was, a lot of great deals going on.
And this was the index. I know we had some companies that we bought, still hold them now. They're up 4, 5, 600% since that time frame. So it was a great time to buy. But what caused that in 2009? Banking and real estate problems, and the banking crisis was really bad. I mean, the leverage, we always talk about debt, it was terrible back then. The banks really did come close to collapsing. Some did, actually.
Yeah, and it was crazy, and a lot of it had to do with consumers too. I mean, those consumers got over leveraged once again, like the banks, with their mortgages, and it just
real estate.
it was a terrible time for the economy.
Yeah, so leverage is very bad. But let's talk about today, because people are concerned, like, it's 7 years ago, it's going to happen again. Today, the economy is very good. The banks are stronger than ever before. The economy is chugging along at a decent pace. It's not a boom economy. And we've got lower gas prices. We've got lower unemployment. So things are looking pretty good in our economy right now.
Yeah, and I like what Janet Yellen said. I think that was last month. She said, bull markets are not measured in time.
Very good. Yeah.
So
it's the value. That's where we talk about the value of companies. So also today we had the energy reports come out, and we had inventories. Oil right now, West Texas around $38 a barrel. Low is like 26. So wow, we've had a nice rebound here, haven't we?
Yeah, it's been great. All these people, oil is just going to continue falling out. Iran's coming back. All this drama. Well, we're seeing a nice bounce since that time period. A lot of shorts have been covered, which has helped, I believe, raise that price of oil again.
Right. And in the numbers, we see inventory today up 3.9 million barrels. So the inventories are rising. However, there are some things happening with gasoline on the other side that's going to cause this to probably decline.
Yeah, we saw gasoline fall by 4.5 million barrels. Why? Because it's the beginning of driving season. And for those saying, it's just the beginning of driving season, that's why we saw a drawdown. Well, gasoline demand is still up 7% year over year. So we're seeing even higher demand than last year, which is always a positive.
Right. And also, too, we're seeing some of these energy stocks. Like I know in our portfolio, we had some that actually doubled in price from the stupid lows they were at. It was ridiculous where they're at. So energy companies, some are looking very, very good, but make sure you buy the ones that can weather the storm. Maybe it's not over yet, but I think it is. I think we're moving forward.
Keyword again, not over leveraged.
Exactly. Very good. All right. Speaking about over leverage, let's look at a company. We always try to look at a company every day for you. Solar City, because I was thinking maybe it's time to look at this, and a solar company, and that's what we did today. So Solar City, current price around $26 a share, 52-week high 63. The low 16, so close to the low there. But what I saw was Whole Foods signed a solar deal. They have about 100 stores, maybe put solar panels on them and so forth. So I thought maybe this is a good company to look at. But then you look deep in the numbers, and I found some things we didn't like.
Yeah, once again, I think today's theme is leverage.
Mm-hmm.
Their debt has doubled in 1 year and now stands at $2.9 billion, which doesn't compare favorably to their equity. I forget the number you had on that, but
yeah, the equity about a year ago was about $750 million. Now it's about $875 million. So again, not even million. So not even the growth that they saw.
Yeah, so that means their debt to equity stands at over 3 times, which is very concerning.
Right.
And going forward too, the company's not making any money, which is very concerning. And we took a look, and that's how we always get our target sell prices based on earnings. Well, in 2017, the company is estimated to make $8.60 per share. Oh, I'm sorry, lose $8.60 per share. Got a little positive there. And then it doesn't get any better in 2018, as they're still estimated to lose $7.30.
And what I also noticed on this company too is capital expenditures. Back in 15, they're about $1 billion. They're going to double to about over $2 billion. So again, nothing right on this company other than they got solar panels. So not a good company. And I must say that Elon Musk, who touches this company, is a chairman. I think he likes debt like Tesla. This company's way far in debt. I don't think he's scared of debt. I don't get it. I don't know. So
Yeah,
I know you want to comment on that, but all right. So maybe you think investing is hard. Well, you know what? You're right. Investing is hard. That's what we do full time. Is we work on investments. You see how deep we go into this. So if you want to talk about your portfolio, you want to have a consultation, whatever you want to do, come in and have a conversation with us, give us a call, 858-546-4306, or go to our website, smartinvesting2000.com.
and be sure to go to that website now, smartinvesting2000.com, so you can sign up for our upcoming workshop on Saturday, March 19th from 10 a.m. to 12 p.m. We'll be hosting at National University in Rancho Bernardo, and at the workshop, we will be going over a stock that could potentially be a buy in our portfolio, and that company is locally based Qualcomm. We'll be reviewing stock fundamental analysis and why it's successful. We'll be showing you when to buy and sell a stock, and also going over the 5 common mistakes the average investor makes.
Hope to see you there.